Well, hello everyone. Today I'm going to do something really interesting for you, especially if you're just starting out. Now, I know a lot of you are either fundamental traders looking at value, looking at stock prices. I look at everything. I look at fundamentals and technicals. But today, I want to give you a really clear understanding of how I measure momentum and how I measure momentum to trade breakouts and how I measure momentum to trade pullbacks, because it's a completely different process and there's different steps involved. And I'm going to break it down because here's the thing, regardless of whether, and again, today I just want to make sure everybody's on the same page. We're going to talk about technical trading strategies. We're not going to talk about fundamentals. We're going to talk about pure technicals. And I know a lot of people who are watching this follow James West, who's a fundamental trader. This is a really good complement to what he does, and I'll explain to you why. Because regardless of your trading style, whether you trade fundamentally as an investor or whether you're a market timer, you will never, ever, ever be able to duplicate the kind of accuracy that you will get on your trades when you mix fundamentals and technicals together. When I'm trading based on technicals, my accuracy is about 65, 70%. When I'm investing based on fundamentals, I don't trade based on fundamentals. It's kind of hard to trade based on fundamentals. It takes a long time to reach profit because you're an investor. You're not market timing. But when you combine the two, you're able to get the benefits of both. And I've been using fundamentals and technicals for my videos now for quite a few months live. And we looked back at the last 150 trades. And out of those, 85% of the trades went higher over a period of a quarter, which means my accuracy is about 85% when I'm mixing fundamentals and technicals. Now, if I was to get into all of it, we would be here for a very, 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 very long time. So I'm not going to do that. But what I do want to do is I want to spend some time with you talking about how I find my technical setups. I'm going to show you how I go through my momentum criteria, how after finding my momentum criteria, I back into the stocks that I like to trade that are ready for the setup, that have not been overbought. And then I'll talk about pullbacks. So we're going to cover all. Now, one thing all technical trades that I perform have in common, I start off with stocks that are trending very, very strongly. So that means I need I want to see a stock that's moving. I don't want to see a stock that's just sitting there moving sideways. So what I did many years ago, and actually what I'm about to show you right now, this was the start of my systematic trading career. I realized that if you don't have a systematic way of keeping track of stocks that are outperforming or underperforming, you are going to have a major, major disadvantage. You're always going to be chasing, looking for the right stocks. So what I do is I create a hit list or I create a short list, but I'm always looking at stocks that are trending. So let me show you a real quick way that I've been able to do this. And I do this for the NASDAQ 100 and I do this for the S&P 500. I do not do this for the small caps. And let me explain to you why. Small cap stocks are stocks that don't have a lot of institutional exposure. They don't have a lot of institutional sponsorship. In order to create sustainable momentum, you need to have institutional sponsorships. 30 years ago, retail traders were controlling the markets. Now, institutional traders are controlling the market. Pension funds, IRAs, so forth. So it's very important to match momentum with momentum stocks because, and I've tested this over 30 years, small caps just don't have the momentum for this type of a study. But mid caps, large caps, Dow stocks, large caps are really good for what I'm about to show you. So there's two ways that I look at momentum. The first way is I look at what I call the CSI, my Cumulative Strength Index. And again, I do this for the S&P 500 and I do this for the NASDAQ 100. So let's start with the S&P 500. And it sounds very complicated, Cumulative Strength Index, but what really is it? Well, it's just a simple measure of taking percentage. Everything is percentage high. In other words, if one stock outperformed another stock on a percentage basis over 6 months, that's my first criteria. I want to see the relative performance of all the stocks in the S&P over a 6-month period. Then I want to see the relative strength performance of all of these stocks over a 3-month period. And then I want to see a relative strength performance of all of these stocks over a 1-month period. Then what I do is I average all three. And here's where things get a little tricky. A lot of traders, they like to average them in a funky way. In other words, they like to give preferential treatment to stocks making 1-month high. Or if a stock is moving more in the 1-month high versus the 3-month high or the 6-month high, I don't do any of that. You know why? Because I found out that there's a very strong relationship between how much strength these stocks get on a quarterly basis. Because remember, Wall Street works on a quarterly basis, 1 month, 3 months, 6 months. 1 month doesn't go into that quarterly basis, but the 3-month and 6 months do. And I find that sometimes we'll see a stock have really strong 6-month performance, and then it lags on a 3-month performance, but then it really kills it again on the 1-month performance. So it's really important to show strength on 2 out of 3 of these levels. Otherwise, it's not interesting. And that's why I like to see it on all 3 periods. And that's why I don't choose and pick. Well, is it 1 month best or 3-month best or 6? I don't even look at them separately. I just look at the average. And also what I typically do is there's almost 500 stocks here. So for the S&P 500, I'll look at the first page. I'll look at the top page. I'll probably usually 85-90% of the stocks, I'll just go up to like top 30. Maybe top 40. But you can go all the way down to the first page on the S&P because even if you're going to go down all the way to the first page, you're still going to be in the top 10 percentile or top 20 percentile. But again, keep it down to maybe the top 30 stocks, top 20 stocks. And as you could see here, Dexcom, PayPal, Apache, eBay, NVIDIA. This one right here, SNPS, this is a new one on my list. And Cadence, these are new. And I know what you're thinking. This is a lot of information, but I'm going to tell you something interesting. You're going to see major changes very rarely. Usually, once the stocks get on the top 10, 15 percentile, they stick to that level. They really do. So if I have a few new stocks pop in, I'll see it right away. Like in this period, we could see that the only 2 stocks, or actually 3 stocks, FCX, ABMD, and CDNS. Those are the 3 stocks that are on this list that I'm not really familiar with on this list. I'm familiar with these stocks, but not on the list. And to show you some examples, let's look at DXCM, just to show you what kind of strength I'm talking about. Here. I'm recording this, so it's a little slower than usual, but bear with me here. See, look at that strength. Strong. That's a strong stock. Let's look at another one, PayPal. So if the stock doesn't make the cut, I simply ignore it. Just that simple. You want to be in, look at that trend. That's a strong trend. And it trended in the last 30 days and in the last 3 months. Let's look at 6 months. Yeah, it was strong. Look at this, 101% over a 3-month period. That's a strong stock. I'll look at one more. How about eBay? Just to give you some perspective. Yeah, look at that. Yeah, I wouldn't really follow this Apache, but eBay is good. And again, you got to look at them. But I think it's because it's a low price stock and it made a big jump in price, so it made it on the list. But again, you got to look through these. So that's my relative strength scan for the Nasdaq. Now let's look at my relative strength scan for the S&P. That's for the S&P 500. Excuse me. Now let's look at my relative strength for the Nasdaq stocks. Same thing. 6 month, 1 month, 3 month. And we got Tesla, Melly. Look at this Melly stock. It's insane. Really, really good stock. Now, I spotted this stock right around this level here when it was around 600. It's almost at 980. Look at this relative strength, right? So you could see this relative strength scan is very, very, very effective. But the question now is, so we see the strongest stocks. Now what we want to do is we want these stocks to make 90-day breakouts, and we want to see them visually. And if we find a stock that matches our scan, we're good to go. So for example, let's just quickly go back here. Let's go to our filters. Let's go to our relative strength list. Let's go to the NASDAQ. Let's go to the cumulative strength. Here we go. And if you look at this list, we could see the stocks here. So all we have to do is look at 90-day breakouts and see which ones are on our list. eBay. We just saw eBay a minute ago. Real strong stock on our list. So it's really strong on our relative strength list. It's the fourth one. And it's making a 90-day breakout, which means it's the highest price in the last 90 days, which is a good buy zone. All right? Very, very important. So again, I'm matching 90-day breakouts with, I'm looking at the top stocks on my list, and I'm looking to see which ones are making 90-day breakouts. CDNS. Remember it was on the top, CDNS right here, and it was also on our S&P list. So I'm matching stocks that are making 90-day breakouts to stocks on our list, on our relative strength list. Let's see if we could find some others. And again, I only want the strongest stocks on our list. So we just found two really, really quick. Let's see if we find any more. And you don't need a lot. You just need a few. All right. Here's another one that I really like right now, by the way. Let me show you. Logitech. This stock has been just smoking hot. And Cena is a very good medical stock too. I figure since I'm here, I might as well show you. Notice 90-day breakout after a tight range. Very, very nice stock. So again, you want to find a few stocks that are up here, and that are making 90-day breakouts. So let's now go to a different scan. Let's go to the S&P scan. It's got more stocks. Let's relative strength them. PayPal, Apache, eBay, NVIDIA, West, SNPS, Fremont, IDXX, Lowe's. Again, look at these stocks. If you see any on our list, bingo, we're in game. Conagra brand. Let's see if CAG is up there anywhere. No, it's an energy stock. It's not making all-time highs right now, or relative strengths. But the point of the matter is, you could see right away, we went on our list and we found two stocks, eBay. We found, let's see here, what was that stock? It was 90-day breakout, and it was eBay, and it was a few of them here. CDNS right there. And I believe Electronic Arts is doing really well too. Let's take a look. EA. Let's see if we could find it on our list. Let's see where it is. Nope, not on our list. I thought EA was really strong. Electronic Arts was really strong, but I guess either I'm missing it or not. But again, we found a few. We found eBay. We found Synopsys. We found a few. And that's the key. We don't have to find a lot. We don't have to find everyone. We just need to find a few. Now, let me show you, if you want to trade pullbacks, what you would do. You would simply go to bar chart or any other program that you're doing, and you would add this indicator right here. This indicator is the 50-day moving average. I'll delete the 200-day. So all we need is the moving average, 50-day, and the 10-day RSI, these two indicators. The 50-day moving average is right here. That averages the 50 days of price and just gives us the average. And the RSI is a momentum oscillator. It goes from overbought to oversold. Anything above 70 is overbought. Anything below 30 is oversold. So we go back to our list of stocks, right? We go to our relative strength list. Let's go there right now. Let's look at the NASDAQ. Let's look at the cumulative strength index for the NASDAQ. Since we already looked at the S&P, let's organize them again. Tesla, Melly, PayPal, NVIDIA. So let's see if we could find a few stocks that are pulling back, all right? Tesla. Let's look at Tesla. Is it pulling back? Melly's not pulling back. Let's see if Tesla's pulling back. We want to see a pullback to the 50-day moving average. Definitely not pulling back today. Look at this thing. It's breaking out. Let's see here. Let's see if we could find a stock that's pulling back. How about IDXX? Let's take a look. And again, these are just price levels for you to look at. So you can measure, see where it is, and put an alert for yourself. Here's the 50-day moving average. We're not there. So if this stock reaches 298, that's a pullback level for this stock. So all you've got to do is go to our charts, NVIDIA. Let's go to NVIDIA. And you can set an alert for yourself. So when it reaches the 50-day moving average, you will have an alert. It's up today. Let's see if it went down there. Nope. Kind of, but not all the way. I want to find one that did. Let's see here. Let's see here. How about Apple? Let's see if Apple did it. These stocks have been so strong lately. Let's see if we saw a pullback. Nope, nothing pulling back. It's a good thing for tech stocks. They're strong right now. How about Lowe's? Maybe Lowe's pulled back. Notice again, I'm looking at the relative strength stocks and then I'm seeing if they're breaking out or if they're pulling back. Nope, nothing pulling back. But again, we have a pullback zone, 120. Let's look at a few more. Let's look at Autodesk, one of my favorite stocks. Autodesk was actually one of my picks. PayPal and Autodesk were my last two picks for the Titan Plus program. Let's see here. Not there, but looks like we're pulling back. Again, we want to wait till we hit the 206 level, the 50-day moving average. So the point is, you want to wait for pullbacks to the 50-day line. But let me show you another way to do it. There's a signal I have here, and let me show you. These are 90-day breakouts that pull back to the 10-day price low. So let me give you two right now, so you walk away with a couple of picks in your hand. XLRN, Acceleron Pharmaceuticals. It's pulling back to the 50-day line, a little lower. I would wait for it to rise above. But notice we move to the 50-day line, we break out. We move to the 50-day line, we break out. We move to the 50-day line, we break out. XLRN. Let's see if it's on our list. Let's see here. Let's see, maybe it's on the S&P. But I know it's making a 90-day breakout and a 10-day low. Let's see if we could find it on the first page. Nope, doesn't seem to have the relative strength we need. But again, it's making a 90-day breakout. And now it's pulling back to the 10-day low. BTAI, 90-day breakout, 10-day low. Sony, 90-day breakout, 10-day low. Papa John's Pizza, 90-day breakout, 10-day low. Let's look at Papa John's. I like Papa John's Pizza. A lot of people staying home and delivering things to their house, eating at home. Pizza delivery services are doing well right now. Again, breaking out, pulling back to the 50-day line. So again, I wanted to show you the most important thing I wanted to show you is you don't want to buy stocks just because the stock sounds good. You want to make sure that it's performing. How do you find if a stock is performing? You go and see if it's making a 6-month, 3-month, and a 1-month average relative high. You organize it by that list. Then you find stocks that are on that list that are making 90-day breakouts, and you match them together. And if you find one or two, you should be good to go. And again, here's the 90-day breakout list. You could look at them on the chart, and you could see gold, for example, is making 90-day breakouts. Xilinx is making 90-day breakouts. Qualcomm is making 90-day breakouts. But some stocks are making 90-day breakouts like eBay, right, that are also on our list. What was the second one? There was two here, I remember. There was a few. It was eBay, and where's that other one? I'll find it. Cadence. Those two. Both on our relative strength and our 90-day list. So those would be the ones that I would be looking at. The point is that you are using relative strength to pick stocks. And here's eBay, and here's Cadence. Top 10 on the relative strength list. Out of 92 stocks, it's like the top stock. So the bottom line is use these relative strength scans, and if you're looking for pullbacks, wait for stocks to hit the 50-day moving average on a pullback before you go long. So now you have a good understanding of how to find strength, how to match it with a breakout via 90-day high, and then how to wait for a pullback before you go long. I hope that helps. Bye, everyone.